The United States Federal Reserve has cut the key interest rates by another 25 basis points to 4.50 to 4.75%. The rate cut is in line with the market expectations. It comes less than 2 months after it reduced the interest rates by a significant 50 basis points, thus kickstarting the rate cut cycle after a gap of at least 4 years. While addressing the media post-policy announcement, U.S. Federal Chairman said the employment rate is notably higher as against the last year, but it has edged down over the past 3 months and remains low at 4.1% in October. Inflation has eased significantly over the past 2 years. Total PEC prices rose 2.1% during the 12 months ended September, excluding food and energy. Core PCE prices rose 2.7%. Overall inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elated. My colleague Sakshi Bajaj will be joining me for more details, but before that, let's listen in to what the federal chairman had to say.
Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%.
And now my colleague Sakshi Bajaj is joining me. Sakshi, will this Fed cut have any impact on the US elections and the policies? Will it differ or change now after Donald Trump has settled into the office?
Well, like you said, as far as the impact is concerned, Wall Street really cheering the Fed rate cut decision, S&P 500 and the Nasdaq closing at record highs, and the impact will be felt on global markets as well. So that's as far as the immediate impact is concerned. Yes, as you rightly said, a unanimous decision at large to cut the key lending rate by 25 basis points. The Fed chair, as we just heard, very clearly saying that they're now confident about the inflation path and the trajectory there, but also feeling good about the economy. But crucial to remember here, as you were asking about the Trump administration, that the Fed does not sort of hold back to say that, look, if, of course, we're looking at faster growth with the new administration and new tariffs at large, what does this then mean? This could mean more inflationary pressure going forward. So that's really a key signal there and a key sign there for times to come. As far as, of course, global markets are concerned, you can see Wall Street shutting at a record high. You can see that this will impact Asian markets as well as Indian markets. So an immediate impact for global markets is positive.